China's control over critical minerals and energy resources positions its utility sector as a significant strategic asset in the ongoing trade tensions with the United States. Essential minerals used in clean energy technologies, such as those for batteries in electric vehicles and solar panels, are largely sourced from China. This control gives China substantial leverage, especially as the demand for these minerals is projected to grow under global net zero goals outlined by the International Energy Agency. The U.S. has enacted measures like the CHIPS Act to boost domestic semiconductor production and reduce reliance on China. The trade war has seen both countries imposing tariffs on each other's goods. China has targeted U.S. exports such as automobiles and agricultural products, which are crucial to certain U.S. states and industries. In retaliation, the U.S. has imposed tariffs on various Chinese goods, attempting to pressure China into changing its trade practices and reducing economic dependency. These tariff strategies are part of a broader effort by both nations to assert their economic interests and influence global trade dynamics. Both nations are acutely aware of the strategic implications of their economic interdependence. While the U.S. seeks to diversify its supply chains and reduce dependencies, China could retaliate by restricting exports of critical materials. However, China must balance its retaliatory actions with considerations of its economic stability and global reputation. The delicate balance of power and economic interests makes the trade war a complex and multifaceted issue, with both countries carefully weighing their moves. Despite the tensions, many multinational corporations remain deeply embedded in the Chinese market due to established supply chains and market size. Surveys indicate that while some firms are considering relocation, a significant number continue to prioritize their operations in China. The economic interdependence between the two nations means that businesses must navigate a challenging landscape, balancing the risks of the trade war with the opportunities presented by the Chinese market. The United States is likely to expand its export controls on advanced technologies to limit China's access to critical tech that could enhance its military and economic capabilities. Increasing investments in research and development for emerging technologies like quantum computing, artificial intelligence, and biotechnology is another strategy to maintain a competitive edge. Encouraging American companies to bring manufacturing back to the U.S. or relocate to neighboring countries, supported by incentives like tax breaks and subsidies, is also part of the broader strategy to secure supply chains. The U.S.-China trade war has had significant and wide-ranging impacts on the tech industry. Export controls on semiconductors and other advanced technologies have forced Chinese companies to seek alternative suppliers or accelerate domestic development. Many tech companies are diversifying their manufacturing locations to mitigate risks, leading to increased costs and logistical challenges. The trade war has also led U.S. companies to increase domestic research and development spending to reduce reliance on Chinese technologies, while restrictions on technology transfer hinder joint research efforts. The trade war has accelerated the decoupling of U.S. and Chinese tech industries, leading to parallel tech ecosystems and potentially fragmenting the global tech landscape. Geopolitical risks have influenced global investment patterns in tech, with investors seeking safer opportunities, impacting funding for startups and tech innovations in both countries. The long-term implications of these changes are still unfolding and will shape the future of the global tech landscape, with both nations employing a mix of economic, technological, and geopolitical strategies. The U.S.-China trade war has significantly impacted the tech industry, affecting supply chains, innovation, market dynamics, and strategic alignments. Both countries are employing a mix of economic, technological, and geopolitical strategies to navigate this complex landscape, aiming to secure their interests and mitigate vulnerabilities. The long-term implications of these changes are still unfolding and will shape the future of the global tech landscape. As the trade war continues, the strategies and responses of both nations will play a crucial role in determining the direction of global trade and technological development.